Hi everyone, welcome back to today's channel of Dionys Loves Pink. So today's topic is about CPF. So if you didn't know, CPF has made quite a lot of changes in the 2022 year, and then I've come up with some strategies for you to beat the new measures and then make full use of the CPF tax reliefs to lower your taxes and as well as grow your money risk-free. Honestly, there's also a lot of videos that teach you all about CPF already, so I don't need to talk so much, and I believe everyone knows like basic stuff about CPF, right? Like OA can use for what, SA can use for what. Just go and watch the other videos like that, okay? So this one is just about strategies, okay? To the point about strategies. Okay, so without further ado, let's go on to it. Yup, so it's CPF strategies in 2022 for Singaporeans and PR, okay? So it's to minimize taxes and to maximize risk-free interest rates for the rich, high net worth and people who like guarantees, okay? So like it's for people who don't like investments. CPF is the way to maximize your risk-free returns, okay? So who am I? I'm a financial consultant, okay? Previously, I graduated from SMU Accountancy, okay, magna cum laude. So I have experience in payroll and HR, okay? Also 4 years experience in Singapore tax, okay? So please do not take this as any like financial advice or like tax advice or anything, because this is just based on my personal knowledge and then it's based on my opinion, okay? So firstly, I'll just give you a brief introduction as to what is CPF. Okay, so CPF, it's a way that you save your money, but it's a mandatory thing. So it's something like Malaysia's EPF, if you didn't know. Okay, Malaysia also have an EPF. Okay, so you will earn 2.5% on monies in your ordinary account, 4% in your special account, 4% also on your MediSave account. So for members that are aged 55 and below, right, you can earn up to 5% on the first 60k of the combined CPF balances, okay? So they will give you an extra like 1% on the OA, 20k from OA, and then extra 1% on the remaining 40k in your SA. So if say your OA and your SA do not hit that amount, right, then they will take your MA to hit the first 60k. Okay, for members that are age 55 and above, you have another account that is will be formed when you are 55 years old, so it's called the retirement account. Okay, so where you will earn up to 6% on the first 30k, okay, then up to 5% for the next 30k. Okay, so this is the government initiative to help you grow your retirement savings. Okay, so how are the CPF interest rates determined? So do you think that the CPF interest rates are always the same? The fact is it's not. If you look at the past results, it's not always the same. Okay, so how is it determined? Is reviewed quarterly, and then the rate is computed based on a 3-month average of local bank interest rates. Okay, so for now, right, even though the interest rates are low, they still manage to give you 2.5%. But then that is only from now till March. So after March, they will review again, see whether they can still give you this 2.5%. So the 2.5% is not guaranteed, and then they can change the rate if they like to, okay? So special account and MediSave account is currently at 4%. So from now till March, they will guarantee you this 4%, but after that, it might not be guaranteed. Okay, so it's a review quarterly, computed based on the 12-month average yield of a 10-year government securities. Okay, then it plus 1%. So the plus 1% is subject to the current floor interest rate of 4% per annum. Okay, so in view of the continuing low interest rates, right, the government will further extend the 4% floor rate, okay, until the 31st December. So until the 31st December of this year, right, it's confirmed to be 4% for the floor rate. but then if the rates continue on to be low, the government can actually make it lower than 4%. Okay, so CPF interest rates are not guaranteed. Okay, they can change if they want to change it. Okay, so a retirement account interest rate, it's the same as MA and SA. Okay, so what do CPF do with your money, right? So they will go and invest it lah. So they invest it in the SSGS and also non-tradable bonds. Yeah, so anyway, basically they take your money, go and invest lah. That's why they can give you the interest rate. Okay, so just be sharing pros and cons of contributing more to CPF. Okay, some of the pros are risk-free, relatively high interest rate in this low interest rate environment, higher retirement income, okay, leading to higher retirement income lah. Okay, then if you contribute more to CPF, then you are compulsorily supposed to, you will get additional tax relief. So you need to see which scheme you are contributing it under. So if you're contributing it under some other schemes, right, you might not qualify for tax relief, so you need to check carefully first. But anyway, I will share with you what are the schemes that are applicable for tax relief, so no worries about that. Okay, then it's a safety net from any legal liability. So in the event you declare bankruptcy, the creditors can't take your CPF. Okay, so that's what's good about CPF. Okay, another thing about contributing more to CPF is about FIRE. So you know what's FIRE? FIRE means financial independence and retire early. So if you have a lot of money in your CPF, you will most likely achieve a financial independence earlier, and then you can actually retire earlier. Then you can, so whatever is outside your CPF, you can go and invest, and then do whatever you want with it. Because basically, if you reach the full retirement sum and the enhanced retirement sum of CPF, right, your retirement is set for a basic life already. So you can continue on to do whatever you want with the remaining money you have in cash. Okay, so some other pros. Okay, so recently everyone knows that it's this OCBC scam. I mean, not OCBC scam. Scammers use OCBC to scam people lah. Okay, so banks are safe. Really, so it's not as safe as everyone thinks. So as in, they will give you the guaranteed 0.05% interest, but if all your money is actually gone from the bank, how safe is it actually, you know? But you see, even if scammers actually got your CPF account login or whatever, right, they can't steal your CPF. Oh my god, CPF is safer than the banks. Okay, so they can't take out your money with your login details before 55 years old at all. So in fact, CPF is safer than the banks, although you can't take it out before 55 as well. Yeah, that's the drawback. Okay, so some cons of why you should not contribute more to CPF. Okay, because it's an irreversible process before 55 years old. Because so technically, if you contribute to OA, you can use it to pay for your house. But you contribute to SA or MA, right? SA, you definitely can't take it out before 55 years old. MA, maybe you can use to pay some bills and stuff. Yeah, so it's an irreversible process, so you should think hard before you actually do it. Okay, so some other reasons why you should not contribute is because definitely you will be able to find financial products more than 2.5% or 4% lah. Yeah, depending on your risk appetite. Okay, so usually when you are young, you like to take risks. So some people might not find that CPF is very suitable for their needs. Okay, another reason is if you top up more, then it will affect your cash flows. Like if your finances are already tight, you might not want to contribute more to the CPF. Okay, another thing is not earning much, may not save that much in taxes. So the thing about contributing to CPF is trying to save in taxes, right? Then if you don't save in taxes, then might as well don't contribute lah. So you are earning low, then no need to care about me, and then you can close this video already. Okay, so this video is only for the people who want to save in taxes and reach and like guarantees. Okay, So there we go. We have our strategies. Okay, this is strategies and 100% legal. So if you use the retirement sum topping up scheme and the voluntary Medisave contribution, you can do these two are shared, right? 8K cap. Okay, so 8K cap you can contribute to yourself or you can contribute to a loved ones. Okay, so this is the max tax deduction you can get, 16K off your accessible income. Okay, so we'll share more about this scheme later, so there will be more in-depth discussion about all these strategies. Okay, the second strategy is the additional Medisave contribution scheme. This one is by your employer. Later I will explain more. And another one is, even though you are working a full-time job, maybe you can do some self-employed stuff and then you can do some Medisave contributions. So this is also tax deductible. Okay. Another option is to do 2 jobs during the year that pay fat bonuses. Later I'll explain this more in detail. Okay. So then if you're a fan of the high interest rate at 4%, then you can transfer your OA to your SA. Okay, so this one there's no tax deduction, just do the transfer and then you earn an extra interest rate. Okay, then lastly, even if you contribute to your CPF, it doesn't mean it's the end. You can still invest it. Okay, so CPF is investable. OA is less it has lesser funds available to go and invest your OA lah, compared to cash. But then if you are talking about like comparing OA and SA investments, right, SA investments is much more limited compared to OA. So OA is limited compared to cash. Okay, works this way. Okay, so first scheme is the retirement sum topping up scheme and the VCMA. Okay, so what is RSTU? RSTU is a contribution to your special account only. Okay, so if you do this contribution, there's a tax relief on the top up. So you can top up yourself or you ask your employer to do the top up for you. Okay, so you will get the tax relief of maximum 8K shared with your MA. So if you actually top up your MA and also top up this, then it has to be shared maximum 8K from 2022. Okay, so if your SA actually already hit the full retirement sum, right? I think currently is at $192. So if you already reached the full retirement sum, right, you won't be able to get the tax relief anymore. If you contribute more than $192, you won't be able to get tax relief. But if you really want to contribute more to reach enhanced retirement sum, right, you can still contribute, but you will not have the tax relief. That's all. Okay, so you can still earn the 4% interest above the full retirement sum. Okay, then I know there's another scheme called the voluntary topping up to the 3 CPF account, but this voluntary topping up to the 3 CPF account, right, it does not have any tax relief, so don't do it. Okay, so this one is a employee side that has no self-employed, right? Try to do voluntary top up to 3 accounts. This one you don't have any tax relief, don't go and contribute. I mean, okay, you can go and contribute, just no tax relief. Just bear in mind, no tax relief. Okay, so if say your employer actually contribute like 27K, you want to top up 10K into your CPF all 3 accounts, right, this 10K is not tax deductible, so you lock up your money in CPF and it's not tax deductible. Okay, so don't do this 3 contribution to 3 accounts one. Okay, yeah. Okay, next, so the other scheme that I'm talking about is the MA one. So it's called a VCMA, voluntary contribution to Medisave account. So if you contribute to your Medisave account, you cannot exceed 66K, which is the current basic healthcare sum. So in case that you actually do any VCMA that's above this 66K, it will just flow to your special account. Okay, so your MA can never have more than 66K. Okay, so assuming, right, you are 30 years old, so every year you will still be able to top up your Medisave account. Why? That's because you pay for your insurance. So when you pay for your insurance, right, usually you will take up at least about what I mean, you will take out at least $800 a year lah. But I just do a person who just take up a private hospital plans for, and also CareShield Life supplement lah. So if you are 30 years old, you will have a CareShield Life, and then you can buy supplements. So you buy the supplements, right, you can withdraw from CPF as well. So your integrated health shield plan also can withdraw from CPF. So MediShield Life costs about $200, as you can see on the right. And then the integrated health shield plan maximum you can withdraw $300, so we just assume $300. And then CareShield, right, at 30 years old it should be around $150, whereas the supplement, the max you can withdraw is $600. So if you do all the maximum, you'll be able to top up your MA by $1,250 every year. So you do this top up, you will get the tax deduction, then you use it to pay for your insurance premium. So it's like free insurance in that sense, okay? It's not really free insurance, I mean like you get to get tax deduction for your insurance lah. So usually you don't get tax deduction for your expenses, right? So this one you get tax deduction for your expenses, plus your MA is generating 4%. So this 4% of 66k is how much? Okay, it's not enough to cover your premiums, okay, but whatever generated from your SA maybe is enough to cover your premiums. So your SA is quite high and your MA quite high, right? Then possibly the total 4% amount can be used to pay for your insurance premium. So it's like free insurance for you, okay? So yeah, that's what I meant, okay? Then just now I shared a yearly cap of 8k for yourself and loved ones. So definition of loved ones are parents, parents-in-law, grandparents, grandparents-in-law, okay? However, if you want to do any contributions to like spouse or siblings, right, you have to make sure they are earning less than 4k a year, which is quite impossible. So spouse or sibling contribution might not work out that well, so it's better to contribute to parents, parents-in-law, grandparents or grandparents-in-law, okay? So if their spouse or siblings are handicapped, also can contribute, no need to hit the 4k thing, okay? So currently I don't do any top-ups for my loved ones lah, so maximum relief I can get is the 8k one lah, okay? Okay, now we move on to the second scheme. Okay, so the second scheme is the additional MediSave contribution. This one quite hard to do because you need to ask your employer to help you do. So you ask your employer to help you make MediSave contributions under this scheme up to 2730 a year. So this is not affected by the CPF limits or basic healthcare sum or anything. The employer can contribute to help you make. So if you really hit the basic healthcare sum, right, this will just flow to your SA and then you still can get the tax deduction. Okay, so it's tax-free for employees. Means no need to get tax, don't need to get the tax exemption or anything lah. It's tax-free, free money to you from the employer. But you need to convince your employer to do this lah. Okay. So excess contributions will just flow to the SA, so we'll still earn 4%. Okay, next, like I told you, even though you are an employee, if your employer allows you to do a second job as a self-employed or a freelancer or whatever, right, by right, you need to report tax. So if you report tax, you will have to do the self-employed scheme MediSave contributions and top up. Okay, so self-employed person supposed to do this MediSave contribution based on age and net trade income. So firstly, you need to report this net trade income to CPF, and CPF will tell you how much mandatory contributions you have to do. So if say you want to do voluntary contributions, you can also do so. Okay, so even if you exceed basic healthcare sum, I say the excess will flow to SA if you are below 55 years old. However, if you exceed a basic healthcare sum when you are already retired above 55 years old, it will flow to your RA. So if your RA is below the full retirement sum, it will flow to your RA. However, if it is more than the FRS, if you already reach FRS, right, full retirement sum, this excess will flow to your OA. Okay, so as a self-employed, right, you can also do voluntary contributions to all three accounts. So just now I say, right, as an employee you do to all three accounts, that one not tax deductible, right? Whereas if you do it as a self-employed, right, it is deductible. But then how to determine this voluntary contribution? It's not 37740. So it is max tax relief is capped at 37% of your accessible income. So if say you only earn like net trade income of like 50k, right, you cannot contribute 37740. It's not all tax deductible, so you can only contribute 37% of these 50k. So 37% of these 50k is probably around the 18k. Yeah, so you can only contribute 18k and get it tax deductible. Okay, so don't use the voluntary contribution to 3 accounts without the under the self-employed scheme. That one is not tax deductible. Although by all means go ahead and do it if you don't need the tax deductions. Okay. So as you know, I read a lot about the CPF contributions. Okay, so there is how you count the CPF contribution. Everyone know that there's a cap of CPF contribution at 6k per month, right? But the 6k per month, right, is considered this OW cap. Okay, so if you earn, they pay you like bonuses, right? That one is under another capping. That's called the AW cap. So the AW cap, right, is determined per employer per year basis. So if say you really earning like 8k a month, right? Say you earn 8k a month, and then because maximum is 6k a month for OW, right? So you earn 6 times 12 is 72k, right? So if you earn that 72k, so 72k is your OW cap. Okay, so 102 minus 72k, right? It is 30k. So 30k is your AW cap per employer per year basis. So if say you quit your job, right, and go on to the second job, right, and then both employers pay you 30k, right, then they have to contribute CPF for both the 30k. Then you can possibly exceed the CPF annual limit of 37740. Okay, so for this 37740, right, I have went to check with CPF whether it's if you exceed the contributions of 37740, what will CPF do with it? Like, if they will allow your CPF contribution to stay in the thing, or they will refund you the excess. So the employer help you to contribute. Will they refund it to the employer or refund it the whole amount to you? Okay. So anyway, it's supposed to be AW per employer per year basis, right? Should not be refunding to the employer. If refund, also should refund to me, right? Okay, so if refund to me, also good, right? I get free money, excess free money. So if don't refund to me, also good. I get to contribute more than the 37740 to my CPF. Okay, so either way, it's a win-win situation. So if you high earner, go ahead and change job and then get 2 fat bonuses in a year, and then you can exceed this cap. Okay. If you don't understand what I'm talking about, you can ask me personally. Okay. Okay, next. There's one everyone knows lah. You can transfer your money from OA to SA, but once you do the transfer, it is gone. I mean not gone. I mean it's there until you are 55 years old. So only do if you are desperate to earn the extra 1.5% interest and willing to wait till 55 years old to take out your money. Okay. Lastly, even if your money is stuck in CPF, it doesn't mean it's not your money, it's still your money. Okay? You can earn more returns by investing your CPF, OA and SA. So you can speak to me to hear about the options to invest your CPF, OA and SA, okay? So earn more returns, enjoy tax savings, and then one thing you need to take note of, there is transaction fees when you actually invest your CPF, OA and SA. So if they tell you the premium is, say you invest in some insurance product lah, they tell you the premium is 15k, right? Then the minimum that you need to have in your OA is 20k, right? So say your OA currently have 35k, you cannot put in 15k, you need to put in 14 something because there is transaction fee. If not, the premium will not go through and the plan will not be incepted. Okay, then you need to redo the plan. Okay, so beware of transaction fee. Go and find out the transaction fees from your bank first before doing the insurance investment or whatever investment you want to do. Sure, got transaction fee one, I think. Yeah. Okay, so SA you can only invest if it's above 40k. So my SA I haven't reached the 40k lah, sadly. Yeah, OA, I invested it already. Okay. So I mentioned OA investments is limited compared to cash, and SA is even more limited compared to the OA. Okay. Yeah. So now that I've talked so much, right? The way to get started on all this stuff, juicy and exciting stuff, is to get started, quit talking, and begin doing. Okay. This is by Walt Disney. Yup. That's the end of my CPF strategies video for 2022. Thank you everyone for watching. Okay, so I hope you have learned a lot about CPF, taxes and everything today. So if you are interested, I will be doing up another CPF tax relief video. So last year I actually did a CPF tax relief video, but it was so choppy and then I ownself watch it and I cannot take it. So I will be redoing that. Okay, I'll be redoing a new one. If there's any new CPF tax relief, I'll also inform you of it. Okay, so you can either watch my old video or you can wait for my new video. So until, I think you are only required to submit your taxes in like April, so no rush yet. I will be filming it by February. Okay, so stay tuned for it. Okay, thank you everyone for watching my videos. Till next time, hope you have learned a lot. Bye bye.